the way that angels invest is the way that VCs used to invest when they were smaller. They use the same words, they use the same investment structure, they use the same terms, as in terms and conditions in the contracts. They use the same contracts. They all have the same expectations. They all have the same expectations of how much is going to come back. Remember the chart, VCs and angels, they invest about the same amount of money. They're in the same business. The difference is for angels, it's their money. For VCs, it's someone else's money, but they're doing the same thing. Now, why this is true, I always love to go back in history. VCs, people think they've been around forever. They have not. The first limited partnership venture capital fund, the way we do venture capital now, was Rock and Davis, 1961. Actually, it was Davis and Rock. Sorry, it's Davis and Rock, 1961, in Silicon Valley. The first VC fund in the United States was in Silicon Valley. They learned how to do what they did from Georges Deroux, who taught at HBS. The very first venture capital company was not that structure. It was started in 1945. It was called American Research and Development. I talked about that in another week. You can go and find that one online. But the first one that's modern in the style we're still using today was Davis and Rock, and it was $5 million, and they didn't even put it all to work. They raised $5 million, didn't even bring it in the door. So VCs were tiny. Second one ever was 4 years later. The founder of Greylock worked for Deroux at AR&D. It's called Greylock. It started in Cambridge. It has subsequently moved to the Bay Area. It didn't move there until after the dot-com bubble, but their first fund was $10 million. Davis and Rock split up. Rock went off and he became an angel again. He found a fruit company in 1977 that he invested in. Two guys named Steve doing something with computers. He was the first angel in Apple. Davis, he went off and funded what is now, a famous VC, one of the oldest ones in the Bay Area. It's called Mayfield. They're on like fund, I don't know, 15 or 16 or 18 now. And the first one was in 19...
funded one of my first companies, and their investment in my company was $3 million.
Yeah, so the first Mayfield fund, which is now, their current fund is probably $2 billion or $4 billion. Yeah. The first Mayfield fund was $3 million. And they took in the portfolio from Davis and Rock. Like when Davis went off to found that, the fund wasn't done yet. They're 10-year funds. It had 2 years left in it at least. They brought that over. The whole VC industry, this is also something that's just mind-blowing. And I bring this up because I think it's important to understand that VC investing is new. It's barely older than me. I'm 52. It only dates back basically to the 60s. Here we are in the 80s in this chart here, and it looks like it's a big industry. This is billions. So that's 1 billion, 2 billion, 3 billion, 4 billion, 5 billion. And so in the 80s, it looks, okay, it's $1 billion industry. But just to be clear, it's $1 billion industry for the entire country of the United States, right? And there are currently startups that have had $1 billion invested in them in one round. Like WeWork, it was $11 billion in one round. So just be clear, that's like 5 years or 6 years of investing here. So that's what it looked like in the 80s. It was starting to grow, right? I don't know what happened here. There was some stagflation or something. That chart is right here because what really happened was the dot-com bubble happened. So here we are in 1994. I believe that was the year that Netscape went public, or at least they talked about going public. 95 was the year Amazon got founded. Yahoo was already a big thing in 94. The Google guys were still in college, but they were out shopping VCs in 94, 95. This internet bubble that we all take for granted now, it was starting to happen in the mid 90s. And the dot-com bubble was the time when the VCs became a real industry, when it came an industry of heft and importance. And so really, when we talk about the VC industry, we're really talking about the 90s to today. We're talking about 30 years. My career started in startups in 92. And we didn't get, no, my first funded company from VCs was 97. And one of our checks was from a brand new VC in Seattle called Voyager Capital. We got the first check ever. The mug of my company's on the wall. It failed. They lost all their money, but they kept the mug because it was their first check they ever wrote. Like it was a crazy time. And then numbers just keep getting higher and higher until 2000. And in March of 2000, the market crashed. So there we are. That's summed up right here. And then the dot-com crash happened. And so nobody really wanted to put money into VCs for a while. There were no new checks written to any new startup until 2004 when Google went public. And I know this because I was an entrepreneur. I was working for a company I didn't start, which was strange for me. And I was writing business plans for 4 years, and I was meeting with VCs for 4 years. And they would just tell me, it's nice, I like it, but we're just not writing checks right now. My fourth startup got funded in December of 04. And I got a long story about that we're not going to cover. It's recovered since then. And so you can see it got bigger and bigger and bigger, even though we went through the craziness of 08, 09. 19, it was pretty big. And then this chart didn't show 20 because there aren't that many charts for this on the internet, crazy enough. These are all the charts there are, by the way. There are no other charts. And 2020 was slightly bigger than 2000. So now we're back to VCs being huge, and most likely we'll have another crash.